Hi, I'm going to go ahead and get started here. We're a little bit delayed and we had an issue with the Zoom meeting link. And so if you had a problem, I apologize. You'll get the recording and we will go from there. And I am glad to be here today. Tax season is underway in our world, and we're going to talk some about taxes today. And we're going to talk about creating a financial plan and a vision for 2019. And I'm going to talk about things in maybe an unusual order because I'm going to talk about them in the order of what I think priority is. And it may not be something that is typical and standard in your experience with accountants and CPAs, because I talk about goals and dreams and intentions first. And I think that that is the primary thing that you need to be looking at when you're planning forward. Taxes come in third place, actually, because the first thing is, what is your dream? What is your intention? What do you want to have in your life? The second thing is, what decisions can you make financially to get you where you want to go and what that looks like? And then the third thing is taxes. And those are the three things that we're going to talk about here today. And if you have questions, if you would just post them in the chat, that would be awesome. And I will address any questions that come up. If you want to unmute yourself and you have a question or you have something that you need clarification on, don't hesitate to unmute yourself and let me know that you want to talk about more detail on what I'm talking about. There is an Excel spreadsheet that contains the worksheets that we're going to talk about. And so you can look at those Excel worksheets, or you can look at these documents. In general, they're going to outline the steps and the procedures that I go through personally every year, sometimes every 6 months, because things change, your goals change. On a dime, things can become very different. And so you've got to realize that any budgeting or goal setting document is a fluid document. It changes and it grows and it expands. And the more clear you are at any point in time, the more effective that document is going to be, because I'm a believer that you create your own results. What you do, what actions you take, control the results that you get and you see in your day-to-day life. And so you've got to be very conscious and very aware of the decisions that you're making, because ultimately you always have the choice to choose different responses. There's an equation that Jack Canfield talks about that says E plus R equals O. And what that stands for is the event. The event is what happens, something, the car wreck. And the response is how you respond to that event, and that dictates the outcome that you get. And that applies to everything in life. It applies to money. It applies to finances. It applies to everything you do. And I believe that you always have choice. You always have control over your response. You may not have control over the event, and rarely do you have control over the event, but you have control over the choices you make on how you're going to respond to that event. And that event can be making money. That event can be spending money. That event can be an unexpected bill that comes in. That event could be a new client, or it could be the loss of a client. So there's all ways that this formula applies to everything you do in life. And so when I start out talking about it, I'm going to share my screen. I start out talking about what are your goals? What are your intentions? What do you want to have happen? Because I think that that's where your business decisions begin. And if you start from the standpoint of I want to make $100,000 a year or I want to make $1 million a year, if you don't have it clear in your mind what you're going to use that money for, it will be very difficult to create the result. But if you have outlined exactly in detail the life that you want to live and how it looks financially, then it is much easier to make decisions that take you closer to that goal. So when I start out looking at this, I start off with 7 basic categories. And I like to put down 3 goals in each of the seven categories. And that's not mandatory, but you definitely need to have something in all aspects of your life. If you're in business just to make money, I think you'll find that that is a difficult row to hoe. You've got to have a why. You've got to have a reason. And these goals and these intentions are those reasons that you want to make the money. When it becomes clear to you and you become intentional about following through on your goals, then your life can transform and you can make progress towards what you are doing and what you want to accomplish. So these are in no particular order in my mind, because I think personal life is just as important as career, and personal relationships is just as important as financial. You've got to be well-rounded, as they say. So in career and professional, you might have that you want to get a promotion, or you might have that you want to expand your business, or you want to take a specific training, or you want to develop a network of resources that you can share and refer, or all things career and professional go into this category. And then the second category is personal relationships, family. One of my goals, my mother lives in Florida, a long ways away from me, and one of my goals is to get down to visit her every 6 to 8 weeks. So that is a goal on my personal relationships and family. I have a goal to spend time with my husband. He travels during the week and I travel during the week, and on weekends we make a concerted effort to have a date night. In my personal life, now those are what falls under personal life, is things like a new house or a new car or a new article of clothing or something that you want to do, maybe take a yoga class. Anything that adds to you personally goes into this category. Financial is, I want to raise my prices to $1,000 per client per month. I want to put $1,000 a month in savings. I want to put the maximum away on my IRA. I want to be aware of my business finances, which we're going to talk about. If under health and lifestyle, you might have a yoga class, you might have a gym membership, you might have anything that is specific to the life that you want to have. And then everybody needs recreation and free time. The recreation and free time, what do you do for fun? Some people play golf, some people work. I tend to fall into the category of working. I'm not very hobby oriented. I don't have anything that I like to do other than play with my 2 dogs, which I spend time doing. And then the last category is your gift to the world? What do you want to leave behind? What do you want to be remembered for? What is going to be important to you when you look back on your life and look at what you have accomplished and what you have not accomplished? What is it that you want to leave as a legacy? What is your community service? That can vary based upon your business and your individual, but this is the starting point. And I like to set what I call SMART goals. They're specific, they're measurable, they're attainable, they're realistic, and they are limited by time. So if you say, I want to lose 20 pounds, you need to say, I want to lose 20 pounds by June 30th, 2019. And then it's specific. If you make a general, I want to lose weight, you can't measure that result. And if you can't measure the result, then it's going to be difficult to say at June 30th that you have actually achieved what your goal was and what your intention was. Now, where this whole table gets different in my world is I assign a cost to every goal. So if I want to join a gym, the monthly cost on that is going to be, let's say, $100 a month. If I wanted to add a personal trainer to that, that would increase it to $200 a month. And if I were really being outrageous, I would also do other classes, and that might be $300 a month. And so the minimum is what it's going to take to say that you have achieved the goal. And we want to translate everything into a financial result. So what that means is, if you want to take a program or a coaching client, what is the cost of doing that? How does it translate into money? What does it look like to have that gym membership and the personal trainer? So you've got to assign, in my world, a dollar value to each one of these goals. And everything has a financial component. Money isn't the most important thing, but it touches everything. It touches everything. It impacts everything. And in order to have the life that you want to live, you need your business. I'm assuming that you're in business and that you want your business to support you completely, which means it pays for all of these things that are goals and intentions in your life. It means that your business doesn't drag you to a point that you don't have these other things in your life, and you have the money to pay your taxes, which I consider a distant third, okay? So those are the things that your business needs to do for you. And the first step is to create the goals and intentions of what you want that business to look like, what you want your life to look like, what is your dream. And I think everybody needs to be doing something that they love to do. That's kind of fundamental on my world. If you don't love what you're doing, then get creative and find another way, because you definitely can. I spent 20 years working for the Iowa Department of Revenue, and I spent at least 10 of those years saying that when I turned 55, I was going to take early retirement and I was going to open my own business as a CPA. And I had very clear ideas on how I wanted that business to look. And that goal drove me for most of my adult life. I wanted to have my own business. I wanted to have my own practice. I didn't have anything measurable. I didn't have anything specific. And frankly, I worked at the Iowa Department of Revenue at least 10 years too long because I didn't take action. I didn't move forward. And I was very unhappy. I was very unhappy in what I was doing. I didn't even want to tell people what I did for a living, which was I was a criminal auditor investigator. I prosecuted people for tax fraud and tax evasion. Yay, team. It was awful. I hated it. And in 2010, I signed up for a coaching program with Jack Canfield's people. And over the course of that year, I left my state job. I bought a business that was profitable and doing well in a small town near me. And I haven't had a day in the last 9 years that I have looked back and said that I wished I had not done it. My only regret was that I didn't do it sooner. So when I talk about these personal life and personal relationships and career and professional, I probably make less money than I would if I were working somewhere else. But the reward comes from being able to have the life that I want to live and spend my time and days doing the things that I want to do. So I think it's really important to be crystal clear. One of my favorite assignments is to sit down and write out an ideal day, an ideal week, an ideal month. What happens? Who do you talk to? How do you feel? What are all these goals? How are you going to feel when you have achieved these goals and met these intentions? And so I'll spend a lot of time in this area. And it really is critical because that's what your business needs to do for you. That's what your business needs to do for you. And we're going to talk about money, I promise. But I want to be clear on these points. So once we start putting minimum and target and outrageous, it's time to break down and look at where I like to begin in the financial equation is on your personal expenses. How much does it cost you to live? Groceries, electricity, gas, garbage, phone, household insurance, rent, mortgage payment, real estate taxes, house cleaning, health insurance, haircuts, pets. What do you spend in each of these categories in order to meet the goals that you put on step one? This is not a budget where you take the money that comes in and allocate it by category. This is a vision of how your life looks and what the finances look like personally, which is where you have to start when you're looking at creating a business, is you need to start at the personal level of all the things your business needs to create for you. Now, also in that personal level, I always keep separate my car, gas and oil, insurance, car payment, lease. I like to, and that doesn't matter. I could put it on the personal expense tab, but I like to keep track of it separately because it's a big component of my expenses. The other thing that I like to keep track of separately is my debt repayment and how much I am planning to pay on each one of my debts. Now, I include mortgage over here on personal expense. I include car payment on the auto expense. So the debt payment is for credit cards and student loans and other miscellaneous debt, okay? Now, these don't have to be perfect, although it's always a good exercise to sit down and find out exactly how much you owe, because most people don't know. Most people don't keep track of it. They haven't looked at it. All they do is worry about it. And worry is not a good, effective action to take. So this is something that you can do to look at, and then you can track it as the years go by or as the months go by. And when you do that, you can see your results. So if one of your goals was to reduce your debt by $5,000 and you put in $1,000 a month, that should be accomplished at the end of 5 months. And so you want to measure things so that they're in a realistic format. And this step 2 has to do with personal. Your personal expenses, if you want to have gym membership, if you want to get a monthly massage, whatever it is that makes your life complete and whole needs to be in these personal expenses. And so you're going to carry that out on a regular basis. So that's that is the bottom line on the equation, is what your personal living expenses are. The second line up from that is your business expenses. Now, your business expenses are going to probably be ordinary and recurring, and anything that is primarily purpose business is something that you should put on this business expenses page and you should keep track of for tax purposes. In the tax world, I'm going to talk about taxes for a few minutes. In a tax world, a deductible expense is something that you can take as a deduction against your gross income. And that expense needs to meet 3 criteria. It needs to be ordinary, it needs to be necessary, and most importantly, the primary purpose needs to be business. So I use an example. If I am a sports bar, I'm going to need half a dozen TVs at a minimum at the sports bar. If I'm a consultant and a business coach, I probably don't need a half a dozen TVs. So what is ordinary and necessary for one business is not the same thing as what is ordinary and necessary for another business. And you've got to look at it and be clear and honest with yourself about where it fits. If it sounds funny to you, then you need to document why the purpose is ordinary, necessary, and primarily business, and then you need to deduct it and not worry about it. If you've got the documentation and you've made the decision that you have what I call a defendable position. Now, defendable position means that you imagine yourself sitting down across the desk from an IRS agent and explaining to them why it is ordinary, necessary, and the primary purpose is business. If you can do that, then you should take the deduction. If you can't do that, then save yourself some agony and don't put it down on your expenses. Now, every business needs to have good records. And if there's one thing that people do that lose them money at tax time, it's not keep track of their expenses accurately. So you need a system. You need a plan. It can be very simple. It can be some envelopes and an Excel worksheet. Okay, it doesn't have to be anything fancy. Once your business is up and going, you're going to want to get it in an accounting software that will give you reports so that you can measure your progress and you can look at where you are in relation to where you've been, and you can make business decisions from those records. Now, we use QuickBooks, and that we also have clients that use Xero, and we have clients that use FreshBooks, but QuickBooks has kind of got the monopoly on the market. And so we talk about QuickBooks most of the time. When you look at your financial statements in QuickBooks, there is a report called a profit and loss. Now, this is the fundamental financial statement that you want to look at. And it's going to do two things for you. It is going to help you make business decisions about what you want to do with your business and your life. And it's going to help you make tax decisions. But first and foremost, it is going to provide you with a history of the past so that you can manage the present financial and you can know what you want to have happen in your business. If you have financial records that go back from the beginning of your business, it's always really fun in my book to create a report that shows year by year what happened in 2010, what happened in 2011, what happened in 2012, and show the progress that your business has made, which gets back to having measurable goals. So if you want your revenue to go up from 300 to 400,000, you have the financial support that shows that you are doing that. And if you're not meeting that goal, you shows where the money is going because you are not meeting that goal. So when you look at a profit and loss, you're going to the first thing line on the form is your income, which this is a consulting business that made $359,000 in December of 20. So it's forecasted. Anything cost of goods sold is things if you hire in-house coaches to work with you, if you hire people that are on payroll to work with you. Those are direct expenses that are directly related to the revenue that you bring in. So if you're a coach and you have an assistant coach, I put that under cost of goods sold. The other thing that I put under cost of goods sold, and this is argumentative and on my part, I suppose, but I like to put the merchant fees for credit card merchants, because that's part of processing your expenses. And it applies and it's relative to the amount of income that you bring in. And so I like to keep merchant fees separately so that I can see what we're paying based upon the credit cards. As you look down through, the next section lists all of your expenses. And you can see that we have $11,000 worth of car and truck expense. We have $16,000 worth of insurance. We've got $4,400 worth of professional fees. We've paid rent of $7,000. So when you look at all of these categories, the first thing you do is you look at it and you say, does that look right? Is that what I really spent? Now, if it doesn't look right and you think it's a questionable item, then what you're going to do is you're going to go to what they call a profit and loss detail. And when you go to the profit and loss detail, it's going to show you that under car expense, we had a lease on the car of $563 a month. We had gas and oil. We had insurance. We had registration and license. We had repairs and maintenance. And the detail P&L tells you every transaction that took place in this primary account. So that gives you information about where you're spending your money. If it doesn't make sense to you, you need to look at the detail and see where the money actually went. And that's what your books enable you to do. They enable you to go back and look at where the money was spent so that you can make decisions about how to do business next month. Now, the other report that I really like to look at is a profit and loss by month. What this does is it shows each month of the year and then the total over to the far right. Now, this is a report that isn't always present in some of the more infrequent accounting users. And I think it's a really important point, because you want to be able to look at this and say, okay, under insurance, I had $1,442 every month except the month of January. So that makes me think something is missing in January. So I can look at the detail for January, and I can see what's different in the detail from February, and I can tell if there is something missing. I can tell if there's something that hasn't been recorded properly. We can see our rent is $583.75 every month. We can see that we went to conferences in August, and so that was a big cash flow item. We can see what our income was for each of these various months, and when you can see that, you can say, well, what did I do in July that created that bump in income, and what do I need to do next month? What do I need to be doing in the future? So the purpose of these records is fundamentally so that you can look at them and make decisions and spend your time looking at what you want to have come out of it. Now, down here at the bottom, there is a net ordinary income of $135,000. Now, you pay income tax on the net ordinary income. If you didn't take any money out of the business, if you didn't pay yourself, if you didn't take a dime out of the business, you're still going to pay tax on $135,000, because you pay tax on the profit of the business, not what you put in or took out. That's one area where people get really confused. And you've got to look at this profit, and that's what's going to be subject to tax. Now, it's going to be subject to two taxes. It's going to be subject to income tax, and it's going to be subject to a thing called self-employment tax. Now, self-employment tax is the greatest surprise to new business owners. It comes as a shock in general, because self-employment tax is 15.3% of your net profit. So if you have $100,000 worth of net profit, you're going to pay $15,300 in self-employment tax. You're also going to pay somewhere in the neighborhood of $15,000 income tax. And there will, of course, be some money for the state income tax. So I always tell people to look at a rough number of 40% of their net ordinary income as being their tax requirement. That's after your deductible business expenses. So that's a big chunk of change. Now, when you work for someone else, they withhold the money, and it never gets in your bank account. It's deducted from your paycheck before you get your pay, and it never comes as a big surprise when you pay Social Security taxes out of that, because it's part of being an employee. When you're self-employed, you pay tax on it personally, and it is a big chunk of money, and it surprises people. They're not prepared for it. When you are self-employed, instead of having withholding, your requirement is to make estimated income tax payments. Now, those estimated payments are divided into 4 categories. So if we know that we're going to owe $30,000, that means that every quarter we need to pay in $7,500, so that when we get to our tax return at the end of the year, all of our taxes will have been paid, and you will come out with an even return. And that process is an estimate. It is a guesstimate, because by the time you get through January, February, and March, you don't know what's going to happen for the rest of the year. You're going to project it, you're going to look at it, and you're going to probably base it on the previous year, But the estimates that you pay in are exactly that. They are estimates. They are not set in stone. They are just estimates to go in. Now, if you don't pay those estimates, the IRS charges a penalty. So it is a requirement that you pay it in quarterly. It is a requirement that you estimate your income and make those payments on a regular basis. When you have a thing called an S corporation, we're going to talk a little bit. A limited liability company is an entity that is separate from you. It is a separate legal tax-paying entity. It has a life and blood of its own, and it needs to be kept track of separately from your personal and business expenses. And that is the second biggest error that people make. The first being they don't track their expenses adequately. And the second biggest error is that they don't keep track and they don't forecast those expenses. And so what happens is it comes as a surprise. If we're doing this a year later, it's terribly difficult to go back and recreate these records, okay? Unless your expenses are segregated. You need a separate bank account for every business that you operate. It needs a separate bank account. It needs a separate set of books. If the IRS contacts you, they're going to want to see your banking records. You want to be able to give them a clean set of records that is segregated and has only included in it the business-related records. And so that's the first thing that they're going to ask you for. So this is an area where people have a lot of trouble. When they intermingle personal and business expenses, it gets very muddy. And the IRS has a simple solution for muddy books. They disallow the expenses. End of statement. End of story. You're done. You're going to pay tax on the $359,000 instead of the $135,000 because you didn't keep track of this total expense of $115,000. So it's critical that you keep track of those things. And you use those business expenses over here on this other document that we were looking at. And you're going to look, what I usually do is I look back at the previous year and I say my average internet service for the previous year was $60 a month. My cell phone, which a portion of is deductible. Don't deduct your 100% of your cell phone. We all know that it's not 100% business, okay? It's not. And so if you have allocated 50% for business or 50% or 80% for business, the IRS can debate with you whether 80 is the correct amount or not. But if you have claimed 100%, then they've already won the discussion, okay? So you don't want to do that. Coaching, rent, team, people that you pay for services, wages, advertising. You're going to take these from your business records that we just looked at. Now, I used an example of $10,000 here for business expense, just on an average, because the next thing I'm going to show you is how do we get to the number that you need to make in your business in order to cover all of this. On the cash flow summary, you're going to start down here on line 20 under savings. And I recommend that you set aside 10% of your gross income into a savings account. If you do it when you receive the money, it's far less painful. And you don't have the opportunity to spend the money and have it go for something that is less important to your future. You want to, the general rule is you need a minimum of 3 to 6 months of your life operation finances to be in a savings account in its minimum form. Then we've got $1,000 for the auto. We've got $1,000 for debt. We've got $5,000 for personal. And we're going to back into the taxes. And I use 33% of your net profit. So in this case, the net profit is $12,000. The taxes are $3,000. And the business expenses from step 3 are $10,000. Now, if you add the $10,000, the $3,000, the $5,000, the $1,000, the $1,000, and the $2,250 together, the minimum that you need to make is $22,500. Now, this number may scare you. It may make you worried. And it can also give you great confidence, because let's say that you had 10 clients paying you $2,000 a month, you would be almost at that amount. So that's the next step, is to look at what can you do, how do you do it to generate the $22,500 that is required to sustain your whole life. Now, if you can't make up a business model that generates $22,500, then you need to really think about whether or not you are wholly committed to being in business, because there's going to have to be sacrifices if you can't generate that kind of revenue. So it isn't a matter of saying, I want to make $1 million or I want to make $100,000. It's a matter of saying how you vary these income and expenses so that you have the life that we talked about back in step 1. So that is my criteria. And when I'm looking at this cash flow summary, I'm going to take the money that comes in and I'm going to put 10% in savings. I'm going to put $7,000 in my personal account. I'm going to put $10,000 in my business account, and I'm going to set aside $3,000 for my taxes. And then I'm going to make my estimated tax payments out of those savings that I've done every month. And that is, in my ideal, perfect world, how you allocate the money that's coming in. Because if you just look at the $22,500, you might take a vacation to Alaska. And if you do that, you are going to be short-sighting all these other categories of income and expense. So that is my view of creating a vision for yourself and what you want your life to look like. And if you have questions, you can email me. You can go to smashingnumbers.com and you can sign up for a free consultation. I always talk to people to find out what they need and how I can help and what's going on with them. And I love doing that. It's my favorite part of what I do. And so if you have questions or you want some additional information, don't hesitate to get in touch with us, because we want to help. And we talked about the importance of having clear goals. We talked about the importance of having clear records. And we talked about the importance of paying your taxes, and specifically in that order. Thank you. I appreciate you attending, and we will talk to you soon.